Thank you so much for joining us. I'm Marlon Bowling, your tour guide to the ag commodity trade, and we're going to be taking a look at what to expect in our ag commodity futures with Rich Nelson of Allendale Incorporated in McHenry, Illinois. He joins us right now. I want to jump right into our overnight trade here, Rich, and examine these prices this morning. Very intriguing developments here in the grain trade. On the corn, for example, we are a little bit higher. We're up about 2 cents roughly overnight. We have September now 2 1/4 higher at 3.43 1/4, and December up 2 1/4. But if you look at the soybeans and then eventually in the wheat, now the soybeans are 4 1/4 higher on September. We're at 8.24 3/4. November up a nickel at 8.38 1/4. And then you get to the wheat market, which has been getting pounded on here for a week or two straight. Well, we have Chicago wheat now 17 1/2 higher all of a sudden this morning. At the September contract is at 5.15 3/4, while December up 16 1/2. And in Kansas City wheat, we also have some big gains. Right now you have September showing a, a last trade of 5.14 3/4. That's up 15 1/2. And in Minneapolis wheat this morning, we have that September contract now quoted at 5.66. That would be up 11 1/2 cents here this morning. What got into the wheat market all of a sudden?
You know, Marlon, to be honest with you, I'm not quite sure myself here. In terms of news here for today, we're not going to get too excited about the maybe some slight progress with Canada and the talks that are going this week. A lot of people are still putting some caution on the optimism for that story. But keep in mind, as far as U.S. wheat exports, about 12% go to Mexico typically, about 0.2% go to Canada. So this may be a Mexico-related issue, but I'm probably going to suggest this is more profit-taking after what's been a tough past 2 or 3 weeks. So perhaps that might be the case here for today's discussion.
Well, I've heard talk in the market about heavy, what they call long liquidation, as the market sold off here for quite a stretch. But are we at the point where we could be looking at short covering already or not? Or what do you think?
And that's certainly a question. I think maybe if anything else, we can say we're going to stop with the selling. I'm not quite sure if we're ready to jump in with strong buying and give us a clear uptrend at this point. Maybe just some stability might be our best we're going to hope for in the very short term here.
Well, I know looking into the future here on the wheat, we had pretty good prospects here for the new crop going in with good moisture conditions in a lot of the country. That would be maybe some of the best conditions we're looking at here for a few years.
Exactly right. And, of course, we could talk about the acreage issue as far as what producers will be pushing into in the next few weeks here with planting relatively close at hand. So that's an important issue. But for right now, like you mentioned, this new crop issue has seen a lot of moisture, maybe not a lot of optimism in the grand scheme of things, but certainly compared with how corn and soybean trends have been going the past few weeks, wheat's not as bad of a deal by comparison here.
Okay, well, I can't wait to compare notes with you about what's going on in our livestock trade as well. It's been an exciting week, to say the least. We're talking with Rich Nelson right now. He's with Allendale Incorporated. And don't go anywhere. We'll be back in just a moment, and we'll talk about the cattle and hog markets, what to expect there when we come back. All right. Should they go ahead and put the chair up there already on that side, or do you need to hold that blank over there first? Hey, Spivey, do we need Tim's chair up there already? Do we need Tim's chair up there now already? Otherwise, we'll have to be moving while we're doing the market report here. And we're back. We're talking with Rich Nelson of Allendale Incorporated in McHenry, Illinois. We're going to take a look at what to expect in our livestock trade today. And here on a Wednesday, Rich, we look at the cattle market, which, where are we now? When you look at the technical chart, we've been trading in a very choppy, kind of a sideways range-bound pattern. Analysts have called it for weeks, the way it seems. And it's just like it cannot really make up its mind which way it wants to go here for sure. How do you read the tea leaves here? Because we have had such a lack of cash cattle movement here lately. And then we had that cattle and feed report recently, which was bearish, but then it bounced back after that. Now what?
Exactly right. I think the question right now for the cash is really more about the packer margin than anything else, in my opinion. Here, we've actually seen some stability here for wholesale beef for 3 weeks in a row. This week so far, we're trading a little mixed, a little lower on choice, a little higher on select. But as a whole, I think our argument right now is what the packer margin is going to be. So we've seen wholesale beef rise while cash cattle has fallen. Maybe for this week that might be more of a stable tone. So I think on futures that's our message here for us right now at least.
On the choice beef cutout values yesterday afternoon from USDA and the select cuts, they were both lower. We had choice cuts going down $1.10. They were priced at $212.53, and you had the select cuts down 44 cents at $204.41. Yesterday afternoon, the choice select spread would now be $8.12 wide. And then you have that lean hog market, which closed limit up on the first 2 months on Monday. That was the day they announced the Mexican trade deal. And then yesterday, they gave a large portion of that back. A very negative day on the lean hog trade yesterday. What do you expect today? Is that neutralized now or what?
I do think we'll have maybe a slight amount of pressure here for today's discussion off the open. This talk, these NAFTA talks here with Canada, is something we got to watch very closely because we bring about 5.5 million head of hogs in down from Canada each year. So that's an important part of our supply. If we do have NAFTA, of course, those numbers are secured. If we have some disruptions, then maybe the trade might have a small amount of concern and price in some bullish news. So we'll see about any Canada progress here in the next few days here.
So it sounds like there are rumors out there that we could maybe get something done yet within the next week or so, right?
It is interesting that there is that talk. A lot of Canadian officials are maybe skeptical of getting a deal done by Friday, which is the private hopes, but we'll see. I mean, right now we can't say anything for sure just yet with these type of negotiations.
Exactly. All right. Well, Rich, thank you very much. I appreciate the visit this morning. Rich Nelson happens to be with Allendale Incorporated. He is based in McHenry, Illinois.